Everyone in America knows Nvidia. The chips, the stock, the trillion-dollar headlines.
Hello, Taiwan!
I believe that computing demand has increased by 1 million times in the last 2 years. This is the beginning of something very, very big.
But what if one of the most important companies powering Nvidia's AI chips isn't even listed on Nasdaq yet, and most US investors are barely paying attention? That's about to change fast. As early as July 10th, just over a week from now, a South Korean company most Americans have never heard of is set to start trading on the same exchange as Apple, Microsoft, and Nvidia itself. The goal here is simply to understand the business, because by the end of this video, you'll understand exactly why Wall Street is suddenly paying very close attention to a company called SK Hynix. SK Hynix is seeking about 45.45 trillion won, or roughly $29.4 billion, through a U.S. listing after its sole-traded shares climbed more than 800% over the past 12 months. So what does SK Hynix actually do? It's a South Korean semiconductor company, and it makes memory chips, DRAM, NAND, and most importantly, something called HBM, or high bandwidth memory. Here's the simplest way to think about it. Nvidia's AI chips are like incredibly powerful engines. But an engine is useless if it can't get fuel fast enough. HBM is that fuel line, ultra-fast memory, stacked in layers right next to the processor, feeding it data faster than ordinary memory ever could. Without it, even the best AI chip in the world slows to a crawl. That's why HBM has quietly become one of the most fought-over components in the entire AI industry. And here's the part most Americans haven't caught up on yet. SK Hynix isn't just a supplier to Nvidia. It's become Nvidia's most important one. In June of 2026, Nvidia CEO Jensen Huang traveled to Seoul and signed a multi-year partnership with SK Hynix to co-design the next generation of memory together, not just buy it off a shelf. The deal covers memory for Nvidia's upcoming Vera Rubin AI platform, its next-generation server CPUs, and even its robotics systems. Huang himself called SK Hynix Nvidia's largest memory partner and said Nvidia already buys billions of dollars of chips from the company every year. At one point during his visit, he reportedly wrote, "Please make more," directly on one of SK Hynix's memory wafers, a small joke that says a lot about how tight global HBM supply actually is. So is that demand really showing up in the numbers? In April, SK Hynix reported its results for the first quarter of 2026, and they were genuinely eye-opening. Revenue came in around 52 trillion Korean won, or roughly $34 billion US dollars, up almost 200% from the same quarter a year earlier. Its first time ever crossing 50 trillion won in a single quarter. Operating profit was around $24 billion, with a margin above 70%. An extraordinary number for any chip manufacturer. To put that in perspective, SK Hynix earned more operating profit in those 3 months alone than it earned in the entire year of 2024. This is what AI demand looks like when it actually hits a company's income statement. Management has also said HBM production is essentially sold out into 2027, meaning customers are locking in supply years ahead of time. So why should an American investor care about a memory company headquartered in Korea? Because SK Hynix isn't really a Korean stock story anymore. It's part of America's AI infrastructure story. The chips it makes are already inside the AI servers running at US customers like Google and Microsoft. And inside the broader cloud build-out American companies are spending hundreds of billions of dollars on. Is SK Hynix the hidden winner sitting quietly behind Nvidia's success? A growing number of analysts think so, and very soon, US investors won't have to squint at a foreign ticker to find out. That's because SK Hynix has filed paperwork with the US Securities and Exchange Commission to list American depository shares on the Nasdaq under the proposed ticker SKHY. The company is aiming to raise up to roughly $29 billion in the offering, which, if it goes as planned, would rank among the largest stock listings in U.S. history, bigger than Alibaba's 2014 debut, bigger than Saudi Aramco's IPO. Could a Nasdaq listing finally make U.S. investors notice this stock? It's hard to imagine it wouldn't. Easier access, more analyst coverage, and a permanent seat at the table, alongside Micron and Nvidia.
There's a U.S. job story here, too. SK Hynix is already building its first American factory, a roughly $4 billion advanced packaging plant in West Lafayette, Indiana, right next to Purdue University, expected to create well over 1,000 direct jobs, and backed in part by U.S. CHIPS Act funding, with production targeted for 2028. This isn't just a company selling memory chips to America. It's starting to build them here, too.
Now, the comparison American investors will naturally reach for is Micron, the major US-based HBM maker. And Micron just posted its own blockbuster quarter, with revenue more than quadrupling and margins near 85%. Proof this isn't an advantage unique to SK Hynix, but a sign the entire HBM industry is living through a once-in-a-cycle boom. So is SK Hynix actually better positioned than Micron in AI memory?
On raw market share, yes. SK Hynix still controls more than half of global HBM supply, with Micron the fastest-growing challenger, and Samsung, despite being the larger company overall, still working to catch up after early quality and qualification setbacks. All three have now been certified to supply Nvidia's next-generation HBM4 chips for the Vera Rubin platform. But industry estimates put SK Hynix's share of that allocation well ahead of the other two. It's a three-way race, and right now, SK Hynix is running in front.
Here's a lesson worth pausing on, because the numbers can be misleading. A single share of SK Hynix in Seoul currently costs more than 2.5 million Korean won, somewhere in the range of $1,700 US. Nvidia trades for under $200 a share. On sticker price alone, SK Hynix looks like the far more expensive stock, but Nvidia's total market value is still close to 4 times bigger, around $4.7 trillion, versus SK Hynix's roughly $1.2 trillion, even though that figure recently made SK Hynix Korea's most valuable listed company, passing Samsung for the first time.
The reason is simple. Market cap is share price multiplied by total shares outstanding, and Nvidia simply has far more shares in circulation. A higher share price does not automatically mean a bigger company. Once SK Hynix's new ADRs start trading on Nasdaq, expect a very different looking sticker price, much closer to a typical US stock, since each Korean share will be split across 10 ADRs. If you want early breakdowns of market stories before they become obvious headlines, consider subscribing, because the biggest opportunities often appear first in the supply chain, not on the front page.
Now for the bear case, because no opportunity is risk-free, and investors need to separate a great company from a great entry price. Is this a real AI opportunity, or is a lot of the good news already priced in? SK Hynix's stock has already climbed several 100% over the past year, and in late June, it fell more than 10% in a single session on reports that Nvidia might trim its chip production plans. That kind of swing shows just how sensitive this trade has become to even small shifts in AI sentiment. Memory chips have also historically been brutally cyclical. Prices spike, every manufacturer rushes to add capacity, and eventually supply catches up with demand, sometimes overshooting it entirely. Could memory prices fall again, the way they have in past semiconductor cycles? It's happened more than once before. There's geopolitical risk, too. SK Hynix still relies on factories in China for part of its production, operating under U.S. export licenses that have to be renewed every single year. And looming over all of it is the biggest question of all. What happens to a company built on AI memory demand if AI spending growth ever slows down?
So where does that leave American investors? SK Hynix has the earnings, the Nvidia partnership, the US factory, and now the Nasdaq listing. But it also has a stock price that's already run a long way in an industry that has never once proven anything lasts forever. So here's the real question worth sitting with. Is Wall Street early to this story, Or is the AI memory boom already priced in? Nvidia may be the face of the AI boom, but SK Hynix might be one of the quiet companies actually helping that boom run.
And with its Nasdaq debut now just days away, American investors are about to find out whether this is just another chip stock or one of the most important AI infrastructure stories they almost missed.